Imagine living in a world where automobiles are genius creations rather than merely machinery, where AI-driven innovation rules supreme, and where highways throb with the sounds of electric power. Tesla is creating a world like this. Tesla is now a market leader in electric vehicles, but its goals are far higher. It is creating solar power systems, self-driving cars, and even brain-computer connections. We'll examine Tesla's hidden potential in this video, as well as its cutting-edge technologies and future plans. We'll also address the question of whether Tesla is just beginning to realize its enormous potential. So buckle up and join us as we embark on a journey into the future of transportation, but not before hitting the like and subscribe buttons. Welcome to the news page for Tesla stocks. Let's get this video. The media frequently refers to Tesla as just a car company. But as you are all aware, Tesla is much more than that. From the raw materials to the final assembly line, they orchestrate a symphony of creation, conducting over 80% of their components in-house. They are the conductors of quality and the composers of innovation at every note. However, the twist is that they are not just passengers on the supplier train. Rather, they have set up camp in the lithium mines, actively mining the vital components for their batteries. This self-sufficiency not only lessens their reliance on outside sources, but also gives their energy dreams a dash of independence. A double-check battery manufacturer and design this degree of control doesn't simply stop the buck, it puts them in a league of their own in the field of electric vehicles. Consider energy density, consider range, and consider Tesla to be at the forefront. Now let's enter the autonomous lane. Tesla doesn't just invent batteries, they blow them into existence. Tesla is not simply towing the tows, they are swimming headfirst into the AI pool. They are the pioneers of robotics and the architects of fully autonomous driving, laying out a future in which cars drive and people take a backseat. Hold on to your seats, for the shocker is about to happen. Tesla is more than just a car or tech firm, they are also a chip with a wizard. They created the D1 AI microchip, a powerhouse that powers their autonomous systems and vehicles. It's a thinking, learning machine, not just a car. Gentlemen and ladies, let's leave the garage. Tesla is not limited to four wheels. Instead, they are soaring through the solar sky and installing solar solutions for residences and commercial buildings, putting the Earth in a sustainable green. Let's now discuss energy storage. Instead of merely using electricity, Tesla harvests it, stores it, and then jokingly sells it back to the grid. This is similar to converting sunlight into money, turning renewable energy into a cash cow, and charging the physical world into the digital realm. With the help of the fifth most powerful supercomputer in the world, Tesla can train artificial intelligence and defeat challenging simulations. Oh, and welcome to the Tesla bot. Their robotics knowledge extends well beyond the road, suggesting a time when Tesla's tech will be able to do many different tasks. Tesla is not the underdog. They are the industry heavyweight champions of electric vehicles, and their array of technologically advanced products demonstrates their unquestionable supremacy in 2023. Whether using gas, hybrid power, or pure electricity, the Tesla Model Y became the industry leader. However, don't forget to keep your charging cords. The tale of Tesla is only getting started, so be ready for an exciting 5 years filled with technological marvels that will change the energy and automobile industries. Tesla's Barron Partners Fund portfolio is an innovative canvas rather than a one-trick pony. A roadmap to a world when automobiles drive themselves and a symphony of change. Energy is environmentally friendly and innovation is limitless. Following the release of their Q2 2023 investor letter, Barron Partners Fund is closely examining Tesla Inc. In its most recent investor letter, this investment management firm called Barron Funds revealed some juicy details. Now, let's talk about the real showstopper and the performance of their fund. It seems like they're dancing to a different tune, surpassing their benchmarks with a jaw-dropping 15.54 return in the second quarter of 2023. This fund isn't just a one-hit wonder. It's been on a winning streak year to date, boasting an astounding 42.59 surge. Meanwhile, the indexes are trailing behind at 15.94 and 16.89 respectively. If you're wondering how they're pulling off this financial magic, take a look at their top 5 holdings to find their star picks for 2023. The Russell Midcap Growth Index and the SP 500 Index didn't even come close, managing only 6.23 and 8.74 respectively during the same period. We should now focus on the main attraction. As of September 1st, 2023, Tesla Inc., a tech titan with its headquarters located in the sun-drenched city of Austin, Texas, is all about the future. They specialize in designing, developing, manufacturing, and selling fully electric vehicles, but they are also dabbling in energy generation and storage technologies. However, in the last month, Tesla Inc. had a bit of a moonwalk, returning minus 2.56% over the previous year. Its shares also experienced a minor setback, losing 9.33% of their value, but don't be fooled by these minor setbacks. The market value of Tesla Inc. is an astounding $777.659 billion, making it a formidable force. Several elements in the current era contributed to the strong performance of their most significant disruptive growth position. Investor attitude toward Tesla Inc. is significantly improving. The concerns that dogged the firm in 2022 are now fading into the past, and the company's financial health is still improving, albeit a minor decline in margins relative to their peak performance. Recent events are showing a bright future for the massive electric vehicle company. Among the most notable are Tesla's successful entry into the Chinese market, where deliveries are impressively rebounding. Additionally, Tesla's most recent Texas manufacturing facility has increased production, which is anticipated to boost domestic sales and profit margins. In addition to these developments, U.S. government policies have worked to lower the cost of Tesla vehicles and lower the company's production of batteries. The strategic partnerships that Tesla has formed with its rivals during the quarter are among the noteworthy developments that support the growing view among market analysts and professionals that the company has not touched the surface of its potential. Early in June, Tesla decided to give Ford Motors access to its state-of-the-art network and electric vehicle charging technologies, marking a significant milestone that was shortly followed by other traditional Tesla, this cooperative trend, which was also adopted by rival automakers and pure EV producers like General Motors, Rivian, and Volvo, is anticipated to continue, further confirming Tesla's infrastructure and charging technology as superior to other industry standards. Consolidation around a single technology is expected to hasten the installation of EV charging infrastructure, allay obsolescence worries, and lessen reluctance among potential EV purchasers. With an impressive 60% market share in the domestic EV segment, Tesla is the industry leader and the main beneficiary of the ongoing shift toward electric vehicles, highlighting its prominence in the market. The global adoption of electric vehicles has reached a tipping point. Beyond EVs, the investment landscape has seen an increase in interest in businesses that are ready to use artificial intelligence. Initially, investors focused on software and semiconductor companies that make AI possible, but they quickly realized that businesses that could integrate AI seamlessly could potentially benefit even more. In this regard, Tesla has been at the forefront, deploying its autonomous driving hardware since 2016 in addition to ongoing software development. The core of Tesla's autonomous driving is AI technology, where vehicles are outfitted to sense their surroundings and make decisions instantly, a quintessential AI application. By successfully fusing cutting-edge computer hardware with proprietary AI training and inferential software, Tesla has established itself as a leader in the sector. While Tesla's performance has improved, it is anticipated that Tesla would eventually market its autonomous service to other automakers under the Tesla brand. Without a doubt, CoStar's rivals have been CoStar Group Inc., which witnessed an astounding 29.3% increase over the previous 3 months, is one of the highlights of Stellar's quarter, which also saw notable growth in a core growth company and another top 10 position, both of which outperformed Tesla in terms of appreciation. Amazingly, CoStar's monthly residential customers have surpassed internal estimates, and this accomplishment was made prior to the company stepping up its marketing initiatives. It is now clear that the residential opportunity is far more significant than first thought, and that it can be explored for less money. Despite being excellent, this diversification plan has not been without its difficulties. CoStar's legacy in a market environment where a small number of companies and industries have been driving performance, the company's ability to diversify its product offerings and potentially dominate an adjacent market category has conferred greater stability and value upon the organization. However, commercial business experienced some softness, primarily due to macroeconomic factors. Protecting against significant portfolio declines has been the financials and real irreplaceable asset categories, which were heavily correlated with MSCI competitors' overall economic conditions, accounted for the majority of the portfolio's poorer performers. However, both of these categories lag behind the returns of the broader index among the fund's larger holdings, with only MSCI Inc. seeing a decline of more than 15%. Comparable to CoStar, MSCI is actively working to expand its business segments. Although this sector has great retention rates, it is nonetheless vulnerable to cyclical economic volatility. Its stronghold is in the index business, where it continues to be the dominating player. A recent regional banking crisis resulted in cautious customer spending, longer sales cycles, and a slight decline in retention, especially among smaller clients. Growth in newer business lines has also slowed, but it is generally believed that difficulties in both legacy products and newer segments will pass quickly. MSCI's products have emerged as the industry standard for ESG and performance risk assessment, even if the banking crisis temporarily limited customer spending. In this environment, MSCI is well positioned to facilitate these managers' offerings through its extensive data resources and client relationships. Accessing private company data will be a challenging feat for MSE, as demonstrated in the first quarter when the fund increased its stakes in selected financial companies when macroeconomic concerns translated into stock price weaknesses. Increased industry regulation is expected to prompt significant product line migration, particularly private assets from traditional banks to third-party asset managers, increased holdings in Charles Schwab Corp. And MSCI were among the noteworthy additions made during the quarter. In addition, the fund's database lists Tesla Inc. as the 28th most popular stock among hedge funds. At the end of the second quarter, 79 hedge fund portfolios owned Tesla Inc., a slight down from the 82 funds that did so the quarter before. As we wrap up our discussion of Tesla, the dynamic landscape of electric vehicles and AI integration, we would love to hear from our valued viewers.